2016 started with a swift kick in the gut to the U.S. stock market, and that was after a few free falls in the fall. And it's those relatively lower equity prices that may be playing into lower sales of luxury homes, depending, that is, of course, on where you live. Diana Olick reports.
Oh, the best is the his and her bathroom upstairs and his and her closets.
No, the best is that this $5.7 million D.C. listing had an offer in barely 10 days.
Demand is higher, even though the stock market has, gotten in the way and snowstorms have gotten in the way. But I think demand is there. People are feeling very good about the economy.
That may be the case in high-end D.C. homes today.
And this is hers.
This is hers.
This is literally the Sex and the City closet, right?
Oh, totally.
But it is not the case nationally. The recent correction in stocks has only put an exclamation point on the strong correlation between the stock market and sales of million-dollar-plus homes. The two did diverge during the housing boom in the mid-2000s, but that had all to do with loose credit.
Coming out of the recession, the S&P index doubled over the next 6 years, and so did high-end home sales, defined as million-plus sales.
More recently, since its peak in May of last year, the S&P index fell 10% as of mid-February. That was matched by a 15% decline in the share of million-dollar-plus home sales. In New York City especially, but also in San Francisco, where the local economies are reliant on financial markets, luxury home sales are slowing and supply is rising. Also in Southwest Florida, where the real estate market is fueled by wealthy retirees from the Northeast and Midwest, luxury sales have stalled.
The high end is impacted by what's happening in the equity markets, but also by the economic base.
Here in D.C., though, the market has a much more steady denominator of government and the high-priced lawyers and lobbyists who surround it. They are still buying luxury homes in force.
I actually think the stock market is good for my business.
Really?
Because I think people are going to really think about divesting a little bit and putting it into something they can enjoy.
In other words, bricks and mortar over bulls and bears. For Nightly Business Report, I'm Diana Olick in Washington.